All right, so we are going to go ahead and get started. Good evening, everyone. My name is Elizabeth Aloni. I am with Schneps Media, the largest local media company in the New York metro area. We publish over 100 media outlets from Manhattan to Montauk, and today we are thrilled to be presenting MCU's first time home buyers webinar. We're going to talk about important things. We're going to explore what it takes to buy your first home. And also, before getting too far in the home buying process, what you should think about to make sure you are ready to own a home. So, let me get started right away with introducing you to our experts. First, please welcome Walter Skowronski. He is the mortgage sales manager at MCU with 20 years of mortgage experience. He's been with MCU for the past 3 years, helping MCU members realize the dream of home ownership. And a fun fact about Walter is that he loves social events and singing karaoke, but not tonight. Welcome, Walter.
Thank you.
Now, please welcome Debra Sinodinos. Debra is the business development manager at MCU, where she has seen a valued team. She's been, a valued team member for 13 years. In her role, Debra oversees a team of business development officers dedicated to enhancing and growing the MCU membership. Debra has 14 years of early education experience prior to joining MCU. And for the past 13 years, Debra has been instrumental in assisting with the growth of MCU's membership. In addition to growing the membership of MCU, Debra is also instrumental in educating members about their finances through their financial literacy series. Debra is a certified credit union National Association financial counselor and a licensed real estate agent. And a fun fact about Debra is she made the transition from teaching young children the fundamentals as a preschool teacher to educating adults about credit unions. Probably why she's so effective. Welcome, Debra. Now, please meet Adam Gonda. Adam has a decade's experience in banking, beginning his career in branch banking, where he had the opportunity to learn about the various types of consumer loans. Later, his career expanded into operations, consumer and commercial lending, and since 2015, real estate mortgages. As a lending sales manager with MCU, Adam can help provide financing for purchases and refinances of primary and second homes, as well as investment properties. And a fun fact, he loves animals and has two Great Danes. Welcome, Adam. And finally, welcome to David Colby, Director of Lending Sales at MCU. David has been in financial services for over 2 decades and with MCU for the past 3 years. His team supports MCU members with all of their lending needs. And a fun fact is David loves to fly and he's working on getting his pilot's license. How far are you until you get it, David?
I'm pretty far off at this point. Time does not
Okay.
allow for fun. So,
All right, all right. Well, it's a
hopefully within the
great
next
thing
2 years
you're
I can wrap it up.
doing. Well, that is a wonderful, wonderful thing to be doing. Well, welcome. I'm going to hand it over to David so we can get things
Perfect.
rolling.
Elizabeth, thanks so much for the warm introduction. Good evening, everybody. Again, my name is David Colby. I'm the Director of Lending Sales here at MCU. We're going to dive right into it tonight because we have some really great information to share with everybody. As we said before, or as Elizabeth introduced, so we have Walter Skowronski. He's actually going to be leading the presentation and sharing the information as we go through the slides. Debra is also going to share some information at the very end on how we can help you save for home ownership, right? Save up that down payment. So we'll talk about some of the additional products and services that MCU has to offer. In the Q&A chat, we have Adam Gonda and Omar wasn't able to make it tonight, so we have Sabrina Kilgore supporting the Q&A. So as you have questions, don't be shy. Make sure you put your questions in the chat and we'll answer them as we go. We do try to leave a little bit of room at the end to answer Q&A in more of a live setting. But again, don't be afraid to put your questions in the chat and we'll answer them. Their contact information will be shared with you. And just a small housekeeping item, I know that Elizabeth had shared that the recording will be shared with everybody. We will also send out the presentation to all attendees as well. So you'll have the deck that we're going through tonight. So just a quick disclaimer from our friends over in compliance. MCU has provided this presentation for information and illustrative purposes only and assumes no liability to any persons on its content or any person's reliance on that content. This presentation does not constitute legal or tax advice. Each borrower should consult with qualified legal, tax, real estate, and we are lending professionals with respect to his or her particular situation. So just a high level of what the presentation is going to entail. So again, this course was designed to help you explore what it takes to own a home and the process for home ownership. Some key questions will hopefully arm you with enough information to answer. So how do you know if you're ready to buy a home? Again, it's a big decision. Most people, home ownership is one of the largest transactions they'll perform in their life. So a lot of thought goes into it. And then what should you be thinking about during the home buying process? We're going to dive into the different individuals that are involved in the home buying process in different terms and terminology that you should know when it comes to looking for a home. Just some key topics. Again, am I ready to buy? So should I buy or not? Home ownership is terrific. It's not for everybody, depending on where you are in life and what your particular situation dictates. Can I get a mortgage? What goes into actually getting a mortgage? We're going to go through that process. Down payment and closing costs involved. So again, we're going to go through what's involved in the home buying process and different costs associated with it. Who's part of the process? You're going to meet a lot of people on the road to home ownership. So we're going to walk you through the different key individuals that are going to help support you on your road to home ownership. Terms you should know. You're going to hear a lot of things like DTI, LTV, credit. Again, we're going to talk you through the different definitions and what you should be looking at. What makes up a mortgage payment? Most people think it's just your mortgage payment, but again, it's comprised of a couple different parts. We're going to break that down for you. How to obtain your credit report. That's a cornerstone to home ownership, is understanding where you are as far as credit goes. The difference nuanced between pre-approvals and pre-qualifications. They're used interchangeably, but there is a difference. And then one of the key individuals that you're going to need to work with is a realtor, and we have resources to help you find a realtor to help you start shopping for a home. So without further ado, at this point, I'm going to go off camera and I'm going to turn it over to Walter Skowronski, and he's going to take us from here. Walter, take it away.
Awesome. Thank you, David. Great introduction. Thank you so much for joining us tonight. So let's start. Terms you should know. Amortization. This is the repayment of the loan principal over time with scheduled mortgage payments that consist of both principal and interest. The loan balance declines by the amount of principal in your scheduled payments. Annual percentage rate, or APR. The APR is going to show you what the cost of your mortgage loan is as a yearly rate. The APR will include upfront fees such as points, as well as interest, and is intended to show you the true cost of the loan. When comparing one loan to another, be sure to compare APRs to get the true picture of what each one will cost you. When they came out with APRs, basically, if you have one lender that's quoting you, let's say you have two lenders, they're quoting you the same interest rate. What you can do is specifically look at the two different APRs, and the one that has the higher APR for the same interest rate more or less is going to be charging you more to get that interest rate. So that's what an APR is. Closing costs. This is going to be the cost of getting a mortgage in addition to your down payment. We like to use anywhere from 3 to 6%, depending on the state, of the total loan amount. Credit bureau. So these are agencies that collect statistics on individual payment records on loans, credit cards, as well as other debts. And we'll take a deeper dive into credit a little later in our webinar. Debt to income ratio, or DTI. This is a term you're probably going to hear a lot. It's the ratio of your total debt payments, such as a mortgage, car loans, student loans, credit cards, medical bills, things like that. And we take that number and we divide it by your gross income, which is before taxes, and it's expressed as a percentage. More terms. Home equity. It's the actual property's current market value, less any liens that are attached to the property. I lost my track there. There I am. The longer you make your payments on your mortgage, the more equity you will have. Increasing your principal payments on your mortgage can certainly help speed this process up. So in a nutshell, what is a home equity? If you have a home that's valued at $500,000 and you have a mortgage of, say, $400,000, the difference between the two is $100,000, and that's your home equity. Escrow. This is an account set up on your behalf in which a portion of your monthly payments is going to be held to pay the property taxes as well as the insurance. Sorry, I had a pop-up. There it is. All right, I'm back. Gross income. This is the amount earned before taxes or types of payroll deductions. This is the money you wish you took home, right? So this is, this would be what your salary is. points. This is a percentage of the loan amount. In order to get a lower interest rate, you may have the option to pay points up front. So what a point represents, it's a percentage. So 1 point would be 1%. As an example, a $100,000 mortgage, 1 point would equal $1,000. And you would pay that to reduce your interest rate, or you have the option to pay that to reduce the interest rate. A pre-qualification and a pre-approval are two very different things. A pre-qualification is more like a conversation about being approved or your income, assets, and credit, where a pre-approval, we actually look at your income, assets, and credit. So the pre-qualification, while not an actual approval, it's going to give you an estimate of just how much money you can borrow, whereas a pre-approval is a commitment from the lender to make a loan to a specific borrower prior to the identification of a specific property. And just remember, even if you're pre-approved, there's still no guarantee that you're going to get the loan. To buy or not to buy. Before you get too far into the home buying process, you should be sure that you're ready to own a home, ready to take on this wonderful experience. Here are some factors to consider. Advantages of buying. It's going to build equity in your better future home. Gives you that sense of community. I like to use an example of where I live out here in on Long Island. The sense of community when I bought my place was, going out during the holidays and just, really getting that sense of everybody's out there, and it's just a fun experience. Personalization. We talk about my Uncle Enzo all the time. He had this wonderful looking house out in Virginia, and he decided to put a huge purple door on the front. It's his house. He could personalize it any way he wants to. And also keep in mind that it may offer you certain tax advantages. Some advantages to renting. There's no surprise expenses. Typically, you're going to just pay your monthly rent. Amenities are typically included, and it's easier to move. And there's also less maintenance required. Something breaks, you make a phone call, the landlord comes in and takes care of it. Some of the topics of buying, maintenance and other expenses. These are, fees that you're going to have to start paying. There's upfront costs to purchasing a home. Market variability. Oftentimes, values of homes are increasing all the time. You hear about that, but it can go the other direction. You can lose money as far as the value of your home. And there's also less flexibility to move. Generally, you're going to have more stuff, and it's just more challenging to move to another location. Some topics regarding renting. There's no tax benefit. You're not getting any equity, or you're not building any equity in the home that you're living in or apartment. There's no control over renting increases, and you could, possibly have some noisy neighbors. Documents to gather as far as qualifying for a mortgage. You're definitely going to want to talk to a loan officer about being pre-qualified. Pre-qualification, if you remember from what I said a little earlier, isn't an approval for a mortgage. It's a less formal way to estimate the range of home prices for you. I like to describe it as a conversation about your income, assets, and credit, and then we kind of back into a number to see what you actually qualify for. You're not going to have to fill out an application, and the lender typically uses the information provided by you to make that assessment. These are some documents that are definitely going to be helpful for a pre-qualification, as well as may as well be required for a pre-approval. You're going to need 2 to 3 years of federal tax returns, so that's your 1040s with all schedules attached, 2 years of your W-2 statements, and employment history. Typically, we like to see a 2-year employment history, but that doesn't mean you have to have 2 years of employment. There are scenarios like, say, the person is a nurse where they just came out of college, they've been in the field for 6 months. Oftentimes, we're able to use the education part as part of that employment history, but each loan is unique in its own way. So, there's a lot of moving parts, but we are able to utilize that often. Paycheck stubs that include year-to-date income. Typically, we like to see 1 month's worth. Savings and checking account statements, and any sort of governmental identification, government-issued ID. Some circumstances will require more documentation, such as a divorce decree, child support, or bankruptcy discharges. So there's going to be 4 factors that count the most in qualifying for a loan. Your credit history. So your credit score is going to give lenders an indication of your willingness to pay, as indicated by your history of payments. So your history is going to help us predict the future of lending you money to purchase a home. In addition to determining your eligibility, your credit score will also affect the interest rate, terms, as well as conditions of the mortgage loan. Debts. A lender is going to obtain a credit report and review all of your debts. Generally, on here, it's going to include payments on all loans, credit cards, charge cards, etc., that you make on a monthly basis. A good goal is to spend approximately 36 to 38% of your gross, that's before taxes, income on all of your debts. Employment history. Your job history is an important consideration for your ability to qualify for a mortgage. The more job stability that you've sustained, the better chance lenders will help you get the keys to a place to call your own. A steady, secure job will also make your loan application that much stronger. Down payment. Do not count yourself out just because you don't have a lot of money saved up for a down payment. With the protection of mortgage insurance, lenders can offer mortgages to qualified borrowers with a low down payment. So your down payment. When you borrow money for a home, lenders typically or usually require you to contribute some of your own money towards the purchase of the house. Typically, a larger down payment, 20% is the standard, means a lower interest rate because lenders have less risk when you have more ownership in the property. However, you're not going to need 20% to purchase a home. With mortgage insurance, or MI, this is going to help qualified borrowers realize the dream of home ownership that much sooner. What it does is it compensates the lender for any losses should a borrower be unable to make their payments. Mortgage insurance allows a borrower to get into a home without having to come up with that 20% down payment. The cost of MI is going to depend on your credit score as well as the size of your down payment. Who's who? You're going to be working with many professionals on the road to home ownership. Each person is going to provide you with a specific service to help you become a homeowner. Loan officer. That's what a lot of us do on the panel here. So a loan officer represents one lending institution along with their loan programs. They're going to help you choose the best mortgage loan based upon your situation and will help you complete the pre-approval, pre-qualification, and loan application process. An appraiser is an individual who's licensed to estimate the worth or fair market value of the property that you're purchasing. Closing or settlement agent. This is the party who conducts the closing meeting. This role may be filled by an attorney, a title company, a real estate agent. It really depends on the state where your property is located. Here in New York, it would be your closing or settlement agent would be the attorneys. In Pennsylvania, it's my understanding that it can be a realtor. So it really depends on the different states that you're purchasing a property. And just a reminder or just a note, we are licensed currently in New York, New Jersey, Connecticut, as well as Pennsylvania. Those are the 4 states that we are currently licensed in. A loan servicer. This is the entity that collects your mortgage payments. It may or may not be the same as the lender, and they pay your taxes and insurance, mortgage insurance, if required, on your behalf. Mortgage insurer, PMI. PMI stands for private mortgage insurance. So mortgage insurance allows a borrower to get into a home without having to come up with that 20% down payment. It compensates the lender for any losses should a borrower be unable to make those payments. A property inspector. This is an individual that conducts an examination of the home. The inspector will look for issues that may affect the value of the property and can assess the condition of the property. A property inspector comes into play kind of early in the process when you're shopping for a home and let's say you put in a bid and you want to buy a home. One of the next things you're going to do is send an inspector out there that has your interests at heart to tell you if there's anything wrong with the home, things like that. A real estate agent. This is the person who acts as an intermediary between sellers and buyers of property being purchased. The agent can provide helpful as well as specific community information. What goes into your mortgage payment? Your monthly mortgage payment is likely to include four parts. We often use the term PITI, principal, interest, taxes, and insurance. So let's break that down. Principal. This is the portion of your monthly payment that reduces the balance of your loan amount. So every time you make an additional principal payment towards your mortgage, it reduces the balance. Interest. This is the portion of your monthly payment that is applied towards the interest, or you hear everybody talking about the interest rate. That's what this piece is on your payment. Taxes. If they're escrowed, it's going to represent usually 1/12 or 1 month out of the year of the annual property tax bill. Insurance. Property insurance is going to be required on every home. Monthly insurance amount is usually included with each mortgage payment, and it's held in an escrow until the bill is due to be paid. Now, one other item there is mortgage insurance or private mortgage insurance, PMI, that may be required when putting less than 20% down. And all of these things make up your monthly mortgage payment. So let's dig into credit. Your credit score has a major impact on a mortgage, from your ability to qualify to the eventual interest rate you get on that loan. The lender is going to order your credit report to assess your ability and willingness to pay a mortgage. So that goes back to what I was saying earlier. Your history of credit payments is going to help us project where you're going to go with this. If you have a good history of paying bills, you should technically have a good history of paying a mortgage. It's a good idea to order a copy of your own report before you apply for a mortgage. Your credit record can be obtained from a credit reporting agency, which is an agency that collects statistics on individual payment records on loans, credit cards, as well as other debts. There might be mistakes on your report. It's always a good idea to order your own report now so you can review it and make sure that it contains accurate information. Federal law requires that each of the 3 nationwide consumer credit reporting companies, that's Equifax, Experian, and TransUnion, that they give you a free credit report every 12 months. And this is in bold for a reason, only if you ask for it. They're not just going to give this stuff away, right? So the easiest and most reputable website to do this is annualcreditreport.com. So you're going to order these credit reports, you're going to get them. Now, what are you going to do? Time to review these credit reports. You're going to check your credit reports for inaccurate information. Some of the credit reports may not report to all of the 3 different credit agencies. So it is important so your information and score may vary. And it's also important to get all 3. Here's what you can expect to see on a typical credit report. It's going to have personal information. It's not uncommon to have variations or misspellings of your name. Most credit reporting agencies leave these variations in there to maintain the link between your identity and the credit information. Sometimes, people's credit report will have a middle initial. Sometimes they leave it out. The reason why they keep those in there, or those variations, is so that way your credit follows you. That's how they help maintain that. Account history. This is the section that includes each of your credit accounts, as well as details about your payment history. It's important to make sure that this data is correct. Oftentimes, there might be a late payment there where there wasn't, or something along those lines where you're able to dispute these things. Public records. This is going to include information like bankruptcies, judgments, tax liens, court records, things like that. Some of this information can stay on your credit report for up to 7 to 10 years. Last thing on the list is credit inquiries. So every time someone pulls your credit, there will be a section to see what lenders actually looked at your credit. So here you're going to see a list of parties who have accessed your credit report within the past 2 years. What can I afford? In addition to your lender, there's tons of online calculators available to help you determine just how much of a house you can afford. An easy guideline to follow is the 38% rule. You would take your total monthly debt should never add up to more than 38% of your gross income. That's that, before tax number. This is called DTI, or debt to income. To do a quick estimate of what you can afford, there's two basic numbers that you're going to need. You're going to need your gross income. There's the income before taxes, as well as any deductions that are taken out. And you're going to need to know what your monthly debits are. This is going to include payments on charge cards, auto payments, other installment loans, things like that. You're not going to include your current rent or your current housing payment in this particular calculation. And here's just a quick example of someone who makes $36,000 prior to taxes. So that's their gross income. You divide that by 12, you get a number of 3,000. You multiply that by 38% to determine what their maximum debt per month should be, which comes out to $1,140. Then you would subtract any current monthly debts. Let's say their credit card payments or anything like that adds up to say $200. Their maximum mortgage payment, what we're left with, is $940. Steps to choosing your home. Before you start shopping around for a home, here are some tips to get you started. Know your budget. Oftentimes when I'm speaking to our members, we're a credit union, so we refer to everybody as a member. When I'm talking to our members, one of the first things I ask them is, what's your budget? What are you comfortable with spending? What are you comfortable with as a mortgage number, things like that. It's important to know. You're the only person that's going to know what you're comfortable with. Don't get emotionally attached. When you're looking at a house, oftentimes you're going to fall in love with the place. Remember, this is a business transaction. There's a seller, you're a buyer, there's attorneys involved, there's realtors, things like that. So it's treat it as a business transaction if you can. It's hard to not take, it's hard to take the emotion out of it, but do your best. Do the research. Make sure you want to live where you're looking to buy a home. Is it close enough to where you work? Is it close enough for where your kids go to school? Things like that. And that also leads to thinking ahead. Where are you going to be 10, 20 years from now? Is this place going to work for you the longer that you stay in it? And definitely take a look at more than one house. As you look at the different houses that are out there in the market, you're going to start to know what matters to you most. That big backyard, that big front porch, things like that, the white picket fence, all of those things. So it's important to look at many different homes if you can. And look, once you've determined just how much home you can afford, the next step, and this is the fun step, is finding the home that's right for you. You're going to want to choose an agent. With the world of information now available at our fingertips, is a real estate agent still necessary in the home buying process? Yes, that's the answer. And no. So the answer is yes. This is probably the largest financial decision of your life. You're going to need a buyer's agent. That's someone who represents you in the buying process. Here's some tips to help you find the agent to work for you. Experience. Is it important for you to work with someone who, does a ton of business every year? Or would you rather work with somebody who doesn't do as much business, but could pay more personal or special attention to you? What areas do they cover? You're not going to use a realtor in, say, Connecticut if you're buying a home in New York. So you want to find someone local or at least familiar to that area that you want to buy. Credentials. It's an interviewing process. You could definitely get recommendations from your friends, family, coworkers, things like that, and ask them, hey, who have you used? And then when you do actually get in touch with them, you could ask them what their credentials are. Not going to hurt. Current listings. How much business do they have? Is it one person managing a ton of different listings? Is that person going to be someone that you want to work with? Oftentimes it could be. Is it someone who doesn't have a lot of listings and they're going to maybe be more available to you? Things like that. And definitely interview prospective agents. Get to know them. I mean, you're going to be in a relationship with this person for at least a couple of months if it goes quickly, more so if not, and you really want to be able to work with this person, get along with them, and have a good relationship. Home Advantage, this is something that we offer here at MCU. Home Advantage can help you search, buy, sell, and save on your next real estate transaction. You can use it to find the home of your dreams. You could use it to sell your existing home as well as research the market. It connects you with top local agents and saves you money at closing. This is available to you as an MCU member at no additional cost. So we do have programs for first-time home buyers, from whether it be down payment assistance to home ownership counseling. There's a wide range of programs that can help you get into your first home. Here are some that MCU participates in. We do participate in a first-time home buyer rate discount. We offer up to 97% financing, and we currently do have a $900 fee waiver. So our first-time home buyer rate discount, you must be a first-time home buyer. What does that mean? You, in the past 3 years, you must not have owned a home or had a mortgage. The discount is pretty generous. It's 0.25% off of any of our fixed rate mortgages that MCU offers, and the rate discount cannot be combined with any of our other offers.
All right. Thanks, Walter. I appreciate
Thank
that.
you.
Again, we offer additional products and services here at MCU, anything between checking, savings, auto loans, personal loans, home equities, and mortgages, obviously. And with that said, I'm turning over to Deb Sinodinos to take us through some of the additional products that can help you save for a home.
Thank you, Dave. Walter, thanks for all that great information. Always so insightful, and I'm sure helped many members today. Right now we have on the screen our newest account here at MCU, which is our high yield savings account, a great way to save for that down payment. It's new money into MCU, $5,000. However, I want everyone to just keep in mind that when you look at what the commercial banks are offering, they're asking for a lot more than $5,000 to earn at such a high interest rate of 3.2%. And not only are we just asking for the 5, but once you've reached that minimum balance of 5,000, you're always earning the 3.2%. So if you withdraw at any point, that money is still earning the 3.2%. So different from a CD, this money is liquid money, so it's there when you need it. But we have many accounts that can help you save. We also have a few CDs that will also help you save, which are real important when you're thinking about home ownership. You have goals. We want to make it easier for you. We want you to understand that this is the place where you can come to save your money because you don't have to worry about fees and maintaining certain minimum balance requirements. That when you do borrow money, it's going to cost you less because the rates are going to be lower. So here at MCU, we want to make sure that we're serving our members the best we can, providing the accounts they need to save money, and any advice they need. This is where you want to come for all your financial resources.
Deb,
Thank you,
thanks so
Dave.
much. No, thank you. Thanks so much. We'll put Deb's contact information in the chat as well, along with Walter and Adams, so that everybody has it, just in case you want to set up a meeting with them or have a phone conversation. And with that said, we're going to take a look at the Q&A. Adam, Sabrina, any updates or any questions that we can answer at this time?
You know what somebody asked was, and I think it's important for people to know, is do I need to have an account to access a loan with MCU? And what is the process of that?
Yep. So I can take that. To apply for a loan, you don't need to be a member, but to actually fund your loan, you do. So the answer is you would need to become a member to acquire a loan through Municipal Credit Union. There's a few different ways you can do that. One of the ways that we work closely with Deb and her team, so our business development partners, they can help you establish an account with MCU along with online. So we do have availability where you can establish a relationship with MCU online. But if you're looking for that human interaction and somebody to guide you through the process, I think Deb and her team would be the best to make sure you're setting up the right account.
Great. Another great question. They said, please give an example of the differences between interest rate and APR. I was under the impression that they were the same thing.
Great question. So an example would be, let's say an interest rate is 5% and the APR is 5.5%. So what is the difference between that 0.5%? That's the actual cost of getting that mortgage. So let's say that I have a rate of 5%. And I'm competing against you, Elizabeth, right? So you've got a rate of 5%. So we're trying to get that deal. My APR is 5.5%. Your APR is 5.75%, or make it even worse, 6%. Your APR is that much higher than mine. Mine technically is the better deal because it's the least expensive option. So the differences between the APRs will basically let you know, or let a consumer know which one is going to cost them more money.
Got it. This is why it's important to be working with professionals who know what they're talking about and can help you through this process, and to do so, early in the process, not after you've fallen in love with the home, but beforehand. Um, and a good question about someone who has a different type of work. This person works freelance and they have a very steady income, but some months the income is huge and other months it can be minimal. So how does that affect a loan approval process?
Great question. So this would be your typical either self-employed borrower or something like that. The way we look at it is twofold. It really depends on how they're structured. Are they a corporation? Are they like a sole proprietorship, or are they in a partnership? Things like that. We would typically determine what they've made over the past 2 years, as well as year to date, and make our determination there. Oftentimes we're looking for income to either remain the same, steady, slow and steady wins the race, or if it's on the increase. Where we get into different scenarios is like if there's a huge drop off in income, or they're taking a lot of tax write-offs that reduces their actual income that they take home, things like that. So it's pretty standard. Self-employed borrowers, or people who are like 1099, things like that. We do those all the time, and it's pretty standard in our business.
Okay, great. Here's another question I think a lot of people want to know about. Will you be penalized if you have outstanding federal loans like educational loans?
No, you're not penalized for them. Maybe the question is if it's in deferment or something like that. Um, as long as you're making your payments on time, that's the most important part. So as long as you're making your payments on time, your credit scores will reflect that. If say you have a student loan that's in deferment, it's not something that's negative towards your credit, right? Your credit scores aren't going to be affected by that. But if there's no payment, we have to attach a payment to it for qualifying purposes. So that's where maybe that question comes into play. But speak to a loan officer about that. Different lenders have different rules when it comes to that. I'm familiar with the way Fannie Mae deals with it, and no two scenarios are alike. So.
Speaking of Fannie Mae, someone wanted to know, do you work with any other first-time home buyer programs?
Such as
Such as NACA?
NACA. We do not work with NACA. NACA is its own program, meaning they have rules and limitations to who can lend to you when you're using NACA. So that's a very specific program. We do not work with them. They actually work with, if you go to their websites, they'll tell you their specific lenders that they work with.
Okay. Now, there's two questions here that are kind of speaking to the same thing. One person wanted to know, how long should I wait to apply for a mortgage after a financial setback that affected my credit? Not a job loss, still steady income, but late payments. And another person asked, if I just paid the IRS 2 to 3 years of back taxes, will this affect my process of buying a home? So both of them kind of looking at past financial issues or credit issues, really. And they wanted to know how that's going to affect them.
That's a great question, but it's a loaded question, right? So I could spend David and I could sit here for
An
2 hours talking
overview.
about that. Like
Twinkle a little info. Obviously, they
I'll
need
give
to
you
speak
the
with you specifics,
yep.
because specifics are critical, of
Yep.
course.
So David's the aspiring pilot. I'm going to give you a 30,000 6-foot view, right? So looking down, I would say that each of these scenarios is unique to the individual. An IRS setback, or something called like a setback or a financial setback, it really depends what that setback was and how damaging it was to your credit. Typically your credit report will bounce back, X amount of months after whatever happened, depending on the severity of what happened. So it's a tough question. That's definitely pick up the phone, reach out to somebody like us, a loan officer that can actually walk through the specifics of it, so we could apply, say, Fannie Mae guidelines and really try to, narrow it down exactly to what we can do. But I'm very pro buy something, right? So if you had an issue, like let's say it was a medical issue, and now we're talking about you weren't able to pay your taxes because you had to pay your medical bills, things like that. There's different scenarios that are treated very differently when it comes to Fannie Mae. So, you know, if you're looking for a home, reach out to a loan officer, and if there's a way to do it, we will figure it out together.
Terrific. And along those lines, because obviously part of the reason why it can affect your getting a mortgage is your credit score. So someone asked here, what is a credit score recommendation? What is good for a first-time home buyer? Kind of what's that, the minimum? Actually, yes, the minimum. Someone else just asked the same question. Um, is there a minimum? What would that be?
Yeah. So the minimum credit score that we work with is 620. But look, we certainly are not saying you have to have a 620 credit score to apply. We encourage everyone to apply for a mortgage with us. We'd love to work with you. As far as guidelines, 620 is our minimum. Other lenders have lower than that. Other lenders have higher than that. So it really varies by the different institutions you're looking at.
Great. And share with everyone again, where can you help someone with their first home? What states do you currently work with?
Awesome question, right? So we work in New York, New Jersey, Connecticut, as well as Pennsylvania, and we're looking to expand. We don't have anything official or in writing, but we are certainly looking to expand our footprint.
Good. So if you have anyone that you know that is a potential first-time home buyer in any of these states, this would be a great webinar to share with them, because MCU can really help them. So I put Walter, Deborah, and Adam's contact information in the chat. I'm going to actually put it in the chat again now.
Hey
And
Liz, while
everyone
you're
will,
doing that, can
okay.
there's one other thing here in the QA that
Yes,
I
yes.
wanted to put out for the audience here. So members who have been with MCU, right, they have longevity with MCU. They're asking if there's any additional benefit to those members.
Yeah, so our MCU membership base, additional benefits would be, right, the first-time homebuyer program. We also have specialty SEG benefits as well. So for example, New York, NYPD, FDNY, if you're a member and you fall into one of those particular brackets, there are specialty loan programs that we offer, like for example, a uniform loan that Deborah's team can assist with. So we do have other financial products and services that if you are a member of MCU, we absolutely can help you. As far as longevity goes, there's nothing as far as the time that you're with MCU that there's a benefit, but being an MCU member does allow you to have access to additional products and services that, say, a commercial bank wouldn't have. So we have a mortgage program currently called the Heroes Mortgage Program, where if you're a firefighter, you are an FDNY employee, or you're part of the DC 37 union, we offer if you're a first-time home buyer, you get the 0.25% discount, and then if you had direct deposit into an MCU checking account, you get an additional 0.25% off as well for those particular segs. And that is a program we're actively looking to expand as well. So
Great. Wonderful. Well, thank you so much. We really could continue all night asking questions, but I really want to thank you all for sharing your knowledge with everyone here tonight. And I know we have a lot of thank yous from our attendees. I want to thank Walter and Deborah and David and Adam. Thank you so much for being here and helping us learn all about this. Again, This is being recorded. You will get the recording. You'll also get a copy of the slides as David shared, and you will get contact information. So I certainly encourage you to reach out because the first step is always the best step when you're educated and you learn about what you need to know to buy a home. So don't wait, reach out early, ask your specific questions so you can really be on strong footing when you go ahead and buy your first home. And thank you all for being here. I look forward to seeing you at a future webinar. Stay healthy and we'll see you soon. Good night, everybody.
Good night, everybody. Thanks so much.
Good night. Thank you, everybody.
Good night.